right, good afternoon, everybody. This is Todd Mitchell for Thursday, July 31st, last trading day of the month. If you can see here, we're looking at the E-Mini S&P 500 futures market. This is where the market closed yesterday. And then today at 9:30, market opened up considerably lower. All right, right in here. Quickly changed from green to red. So we knew the trend was down as soon as it opened, right? But if you're going to day trade, you need to pay attention to the first half hour to see what the tone is, especially when you get a gap like this. If the market does not attempt to try to fill that gap, or at least try to move in the direction opposite the gap, in this case it opened down, so the move would be up. If you don't get a move in the first half hour to 40 minutes, then you can expect with a high degree of probability that the market's going to continue moving in the direction of the gap, okay? So if you look here real closely, the market tried to move higher here. So the first 21 minutes, the market pretty much was consolidating, right? Consolidating, and then the market tried to move higher here on the 951 bar, right? 21 minutes into the open, it tried to move higher, but then immediately rejected that level, okay? Immediately rejected the level, and then immediately came down through the low of the day, the 1947. As soon as the market took out that low, that first 3-minute bars opening low right there, and it took that out, that was your immediate signal to look to short that market on any pullback. Now, if you use the first half hour breakout, and I've showed you this many times, you would have been shorting at about 46 3/4 immediately as it was breaking down through that low. And as you can see here on the bar of entry, the 46 3/4 immediately hit 45 1/4. So you could have easily taken a point and a half off, okay, immediately there. But then when the market rallied up in here, I was looking for a little stronger pullback, a little bit more of a pullback, okay? But if you do go ahead and measure your retracements from high to low, the market pulled back to above that 50%. So it did pull back quite a bit, actually 61.8. It just wasn't quite far enough into that blue action zone than what I would have thought, okay? So the mere fact that the market really wasn't able to pull back into that blue action zone and then drop down to the low, that's where you need to take more of an aggressive entry to the short side. It's more of a momentum play at that time. So as it broke, look at how the market moved and how the market pulled away from that blue action zone, which is meaning this market's weak and the market's going to continue to drop. So when the market finally pulled back, I mean, yes, the market did in fact consolidate in here, but pull back into that blue action zone, that was a nice area in which you would have been looking to go short. And as you can see, the market continued to drop down and then rallied up between the blue action zone, moved a little bit higher before dropping down to this level, coming up a little higher here. Now this is key. This is a really, really nice trade setup. Now look at the market's coming, market's trading pretty much up off the low of the day at 12:27, right, lunchtime. And that's to be expected. The market pulls back and then continues to pull back. And look at what time this is. 1:39 in the afternoon. You would expect somewhere between 1:15 and 2 o'clock Eastern Standard Time for the market to drop back and try to retest the low of the day. Now, it did spend some time in here. Ended up getting into that gray action zone because, of course, as the market went sideways, the blue action zone and the gray action zone moved down with price, but it caught price beautifully. And this is a time where you'd expect a resumption of the market to, a resumption of the downtrend, right? The trend is down, so you're expecting the market to resume back down and at least test the lows of the day, in which it did right in here. Okay, so some really nice trades on the short side for the E-Mini S&P 500. Now, if you remember yesterday, I outlined the stock Amazon. Let's put a daily chart. This is based on a daily chart, right? I was looking to buy this market if the market was able to take out the Wednesday's high, and it never got to that level. So the trigger it was never triggered. The trade was never triggered, so I am no longer interested in trading Amazon to the long side, right? Again, we had a trade set up, but not a trigger. The trigger would have been looking to go long at about 323.10, okay? Let's take a look, a potential trade, or setup rather, for tomorrow. NXPI, right? It's a semiconductor company. Look at what happened here. As you can see here, the market set up here, right into the gray action zone, created an inside pattern, right? The official buy was 62.90. Stop at 60.90, right? Right? Stop right below the 61 even, rather. Went down to 61.10 and bounced up intraday, closing in the top third. Look for the stock to potentially move higher tomorrow, okay? With an initial catastrophic stop below that 61.10, I would still leave it at that 60.90 right down in here, okay? Hope that helps. Have a great evening. I'll be back with you tomorrow. Bye for now.